We have a major warning from Tom Lee and what to expect going forward, including a video that we're going to watch from CNBC. We're going to look at what's happening in the market today and what you need to do to prepare for your portfolio, as well as one stock at the end of the video that I am currently buying shares of. So stay all the way till the end, and I'm excited for you guys to be here. With that being said, let's go ahead and jump into it. So on the day here, before we watch the video, we can see the fear and greed index is at 15, so not looking too good. And then also the VIX is at 26.78. So it's gone up pretty high, almost back to the 30 ranges. You can see it spiked up to almost 30, 29.5. So a lot of fear going on in the market with the Iran war, with potentially rate hikes as the Fed just came out and said, and then possibly not even seeing a new Fed chair for a long time, potentially up to a year. So all these things have affected the market. As you can see at closing today, it was a sea of red, was not looking good in the market. Now, this doesn't mean all doom and gloom. There is some fantastic buying opportunities, and we will be covering that on the channel. I just posted a great video on Palantir as well. So if you guys haven't seen that, go watch it. As you can see in the US here, let's see S&P down 1.5%. Let's look at crypto here. Crypto's up on the day. And then oil. So oil's been stabilizing around the $98, $99 per barrel range, as you can see here. Let's look at the treasuries. So as you can see, bonds went up back to almost 4.386. So that's a big development as well as of the market close. So with that being said, let's go ahead and jump into it and watch this video with the warnings that Tom Lee is telling us.
It's Tom Lee, CIO of Fundstrat, CNBC contributor, and on set, we're going to ask you to graciously, if you would, stick around for a couple of different blocks because we love Tom Lee. Thanks for coming on.
Yeah, glad to be here.
You're not changing that 7,700?
We're not.
Okay, why not?
Well, one, I think 7,700 was a conservative estimate to start because markets have been steadily repricing on a PE basis, and we're only assuming modest PE expansion this year to 7,700. And as much as the war is creating, obviously, a huge short-term setback and a lot of uncertainty, including effects on monetary policy, ultimately, wars are going to be good for the U.S. economy and the U.S. stock market. So I think as we get towards the end of the year, the market stops thinking less about the crisis element of this and more on the opportunity.
I know, and that's hard to say, and it's not an endorsement, by the way, of anything. I get what your point is, because you look at history, and there's like the old maxim, and I'm going to chunk it, but it's something like you sell on the sound of trumpets and you buy on the sound of cannons, meaning when things seem the worst is often when the market does what you least expect it to do, correct?
Yeah, that's right. I mean, I think right now, if we asked any investor, they can list all the reasons why they're worried and what could go wrong, and that's what gets priced in very quickly. But we have to know that that's counterbalanced with opportunities have always emerged. I mean, when we look at the last 8 major war events, the market was always bottoming very early into the conflict.
I have said, nobody cares what I think, but I have said that just given what I've done for 30 years, the markets feel a little too complacent, a little too sanguine maybe about what you just talked about. Go into that a little bit. Do you feel like people are a little bit too comfortable? It doesn't sound like you are. This is where we are and everything's fine.
Well, it's a good question. I was thinking about this on the way here, that we've already had a rolling bear market because last year energy was already in a 3-year bear market and financials had been in a downturn. The Mag 7 has been in a downturn, tech and software. That in total is like 70% of the S&P. And we know over the last few months, before even the war started, gold was going parabolic. So in some ways, I think the market was pricing in uncertainty in a geopolitical event. And I think the reason people are maybe, as you're saying, somewhat complacent, I think people have de-risked already.
How do we say they've de-risked when markets are down like 4 or 5% this year, and in a midterm election year, which is this year, by the way, historically, going back 100 or whatever years, the S&P tends to fall about 15% once on average in a midterm election year. We're only down 5. That seems complacent to me.
Yeah, it's a good point. I think we have to look at global stocks. Last year, more money was made owning emerging markets, owning gold over stocks. Emerging markets have corrected a lot more than the S&P has because the world is worried about growth. And as you worry about growth, you want to own the growth index, which is the S&P 500.
I know you're saying to yourself, I can't imagine it.
Wow. So, I mean, a lot to cover there from Tom Lee, and this is breaking. He just came on CNBC and was there for the market close. So, a lot to unpack with the trends in the market, as well as what was happening with gold over the past 3 years with the softening of certain sectors. So, let's jump into it. So, Tom Lee's estimate that within the year, the market's going to hit 7,700 with the S&P 500. So, that was his, as he said, very modest estimate. Now, I think a big reason why he's putting it at that is because we have several stocks within each sector that have potentially massive growth, such as Nvidia, Palantir, and many others. So when he's saying usually when wars happen, there's a bottoming out very quick. So we saw oil already starting to stabilize at around $98, $99, so just under that $100 per barrel. And a big piece in this is if you look at history, just like Tom Lee said, the past 8 wars, there's been a fairly quick bottoming of the market. And I hope that's true. We're seeing that, a lot of consolidation. When the Fed came out, though, it did cause a lot of fear, especially when they said, Powell came out and said, there might be rate hikes in the market, and that made things even worse with fear. And that's what I think a lot of the backlash is coming from. I don't think it's necessarily just from the war, because that is starting to settle down, is what it seems like. Another thing he said was wars are good for the U.S. economy. It's good for the industry, the defense sector. Oil prices go up. They're a massive exporter. The U.S. is a massive exporter in oil, so it doesn't necessarily hurt their economy on that aspect. It more hurts the consumers at the pump and maybe consumers spending less in the economy. That would affect the revenue and the bottom line of these other companies, as they have a natural effect. But I think one important thing that wasn't covered in here too much was the interest rates are high right now. They're really, really high. I believe the average interest rate for a vehicle right now is like 6.5%, and the mortgage right now is at 6.3%. Okay, so and that's the average, right? So they go higher than that, 10%, 12%, 15% for a car note. If that was the case, I would just wait to buy a car. I wouldn't purchase a vehicle if I was in that position. Now, obviously, I think car loans, if it's not 0%, is very stupid because it's a depreciating asset and you're paying interest on that. But besides the point, I think a lot of people have that same sentiment. Might as well just wait till things soften a bit more, till the markets have a lot more goodwill behind them, and then I feel more comfortable investing, which is a little bit backwards because the market has a lot more potential when stuff is very, very scarce, when there's a lot of fear and greed in the market. So ultimately what he's saying is he believes 7,700 is still a good target. And I believe him. I think there's growth in every single. I don't think we're necessarily going into a massive recession by any means. We just have a lot of scary topics happening now. And then another piece, when Tom Lee mentioned gold going parabolic before even the war started, and this shows a significant shift. There's a lot of gold, there's a lot of shifts into gold when there's a lot of fear with inflation. And the reason why is when you print more money in the market, that is something that is inflationary. You can just print as much money as you want. Gold is finite. You cannot just print more gold. Like there's a finite amount of it in the earth, on the world, okay? So what he's saying by that is there was already fears building up behind the scenes that were pushing money into other sectors, into gold, instead of just the growth, normal tech stocks and companies. So with that being said, let's go ahead and look at one of my favorite stocks that I am currently buying right now, and I'm making a full video on that very, very soon. So let's go ahead and look at it. It is AMD stock. So if you guys don't know it, it's AMD Advanced Micro Devices. So let's go ahead and look at this stock. This is one where I think it's massively underrated, especially with how much Nvidia is about to receive in its new revenue. I mean, we're seeing a pretty flat stock here over the past 6 months, since October. It went up to some highs around, let me see here. So open high around 260, hit around 260 again. So tested that resistance level, but really, really good support on this stock. I think we could see a massive run up in AMD. Like we've seen it's gone through some dips, some highs and lows over the past few years. But with AMD, if we look over to the financials, you can see total revenue in this past quarter here. So we have $34 million, cost of revenue $17 million, gross profit $17.1 million. Let's look at the net operating here. So operating expenses, and then we have operating income of 3.6. So in general, a good company headed in a good direction. And I think especially where it's at with competition to Nvidia, I think Nvidia is going to see massive growth, but currently I am buying some AMD. I'm also considering doing some leaps on NVIDIA and AMD, so I will keep you guys up to date on that. But also in my private group mentorship, I let all of my students know the trades. So if that's something that you guys would like to receive, all my trades, you get the full training course as well as trading live with me every Monday and Tuesday. Go ahead and click the link down below, apply for the mentorship, and book a call with my team. But with that being said, if you enjoyed the video, if you enjoyed Tom Lee's perception and obviously prediction on the market at 7,700, make sure to leave a like. Let me know what you think down in the comments below, and we'll see you guys next time. Peace.